please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. It's a perfect time to take you through the top stories of the day. I am Reema Tendulkar and with me is Nigel D'Souza, and ending F518 on a bit of a sour note. So currently the benchmark indices are down close to about 0.5%. Similar cuts seen at the mid-cap index, so pretty much mirroring the weakness across Asia.
That's right, Reema. In fact, the Japanese index, that was down close to around 500 points at around 10 a.m. Now it's down nearly around 250 points or thereabouts. So we'll keep an eye out. Maybe, in fact, if we can pull up the intraday chart of the Japanese index, you'll see there's a bit of a recovery. Our own markets, well, PSU banks have recovered a tad bit. And in fact, the intraday chart as well will tell you that the Nifty as well has come off the low point of the day. That's the Nikkei. It's recovered close to around 250 points from the day's low. All right, then let's get chatting with our first management. We have MEP Infra. That's the stock in focus. Remember, they've raised money via the QIP route. The company is also in focus as the toll for the Bandra-Worli sea link is all set to increase from the 1st of April. To understand that and more, we have Mr. Jayant Maheskar, the Chairman and Managing Director, who joins us. Hi, Mr. Maheskar. Thanks so much, sir, for joining in. Let's focus on the QIP first. I think you were looking to raise roughly around 200 crores. I think you've raised around 160 crores. If you could tell us the utilization of these funds, and would you require more money? What will this money be used for?
Good afternoon. MEP has successfully closed the QIP at an issue price of 77.5 rupees per share, which was at a discount of 4.9% to the floor price of 81 per share in accordance with the SEBI guidelines. The capital raised shall be predominantly used for the growth of the business, including investment and supporting operational activities for existing and future projects of the group. The company has recently bagged 3 hybrid annuity projects in the state of Maharashtra, aggregating to a total order book of 2,922 crores, which is, I was thinking, the QIP fundraise.
Mr. Maheskar, afternoon. You wanted to raise close to about 200 crore rupees, but you managed to raise only 160 crore rupees. So if you could tell us, what was the hesitation on the part of the investors? Were there any concerns that they raised on account of which you could not raise your targeted amount?
The company had targeted a minimum 135 crores with an upsizing of 65, which was kept as a green shoe option in the QIP. The company has been able to raise 161 odd crores, considering the current, I would say, market trend and in line with the expectation. The company has been able to close at 161 odd crores through the raise of QIP.
Okay.
Yes, but if you could tell us, what was the reason why you couldn't, utilize the entire green shoe option and raise 200 crores? Were there any concerns raised by the investors?
As far as any concerns are concerned, I think investors usually do not comment on any specific, concerns. The only resounding answer is basically either the investors give it a pass or they have specific reasons which are never disclosed. Okay. So as far as MEP is concerned, we are not aware of any such concerns which the investors have predominantly mentioned.
Okay, so you're not aware of any concerns. But sir, there'll be a bit of a gap, right? If you're looking to raise 200 crores and you raise around 150, 160 crores, would you come back to the market maybe where if markets are buoyant again, will you try to raise some money again? And also, your promoter holding is at around 69-70%. What does it come down to? Around 63%?
As far as the promoter holding is concerned, the promoter holding was at 69.82 odd%. The promoter holding post the issue would come down close by around 7.95% to around 61.2% to be more precise.
Okay, and will you look to raise more money, sir, when things are better in the market, when maybe investor concerns are not there as well? Because there is a bit of a deficit, right? At some point of time in FY19, will you come back to raise some more money? Is that a possibility?
I think it will be too early to comment today. Maybe at an appropriate time, we would be able to share more light on this.
Okay. If you could tell us immediately, how will the company be utilizing the 160 crore raise?
As I mentioned earlier, the capital raise has been done in line with the growth of the business, including investment and supporting the existing operational activities. That's predominantly the current projects what we are running, and also the projects which we have backed where the financial closure will take place soon.
Okay.
Okay.
If you could also tell us a little more about the increase in ceiling prices that has come through effective 1st of April. How will it change the financials of MEP?
As far as the ceiling is concerned, the ceiling undergoes tariff growth every 3 years. The last time the tariff growth happened was in 2015 April. This is 2018 April. We will have again a tariff growth of around 15 to 16%. The current toll rates on ceiling from the existing 60 rupees for a car will go up by 10 rupees to 70, wherein the total tariff will be applicable for the next 3 years, starting with effect from 1st April 2018.
Okay, we're not too happy about that, sir, personally, but I'm sure your shareholders will be happy that it's gone up. If you could give us a sense, sir, but what is the current order book that you have? What's the total outstanding order book? And also, more importantly, what is the debt in your books currently?
The total order book the company has, in addition with these 3 projects, is we have a total portfolio of 9 hybrid annuity projects. 6 hybrid annuity projects, the construction has already started where the financial closure was achieved. 3 financial closures are expected in, I would say, Q3 of FY19, post which the construction should start. The total debt in books as of now stands to close to around 3,000 crores on a consolidated basis. 3,000
crores on a consolidated basis. And you gave us, sir, the number of projects you have in terms of your order book. In value terms, what would it be?
The value for all these 9 projects put together will be close to around 6,900 odd crores.
6,900 odd crores. All right.
All right. Okay, Mr. Meskar, we leave it at that. Thank you very much for joining in. So that is MEP Infrastructure after closing their QIP, wherein they raised about 161 crore. For the markets, as we've been pointing out, there is a bit of a recovery from the lows, nearly about 33 points from the low point of the day, and that seems to be aided by the PSU banks on hopes of some relief on provisioning, as the hope sustains that there could be some rollback of that 24-hour NPA recognition norm. The word coming in from KK Mistry, the Vice Chairman and CEO of HDFC, on their bid for Canfin Homes.
We've not made any revised offer. We've clarified that very, very clearly. There is no revised offer we've made. We made an offer to Canfin about, 10, 15 days back, and that's where it is. We have a balance sheet of more than 3.5 lakh crores. Canfin as a company is much, much smaller than us. It's 15,000 crores. So its balance sheet is not going to make a significant difference to us. So if we get it at the right price, we're happy to look at it. But it's not something which is very critical to us or very important to us in that sense. We have said we are not going to make any revised offer. What offer will be made? We made it.
Then a bit of a recovery is what we're seeing on the markets. Well, the Nifty at one point of time was down close to 70 points. Now we're down 35 points. So we have halved our losses, actually. Hero MotoCorp has seen a bit of a recovery. And today, Maruti Suzuki as well has seen a bit of a bump up. And even Coal India, I think, has moved up in the last few minutes. So pretty good going. The breadth of the market has been improving gradually ahead of this long weekend. The advance and declining, they're getting closer to each other. At one point of time, we had only around 350 stocks or 300 stocks that were advancing. Now you have nearly 700 stocks that are advancing. So those lines are getting closer to each other as well. But let's focus on Tejas Networks. Remember, the stock is in focus after the company won an expansion order of around 336 crore rupees from BSNL for BharatNet. We have Mr. Sanjay Nayak, the MD and CEO of the company, who joins us. Hi, Sanjay. Thanks so much, sir, for joining in. Give us a few details of with regard to this order of around 330 crores. What's the timeline? What's the margin? And if you could give us a sense, what does it take your total order book to?
Yeah. So first of all, this order is for the BharatNet project. Part of it will be for completing of the additional stuff on phase 1. And part of the order is for the phase 2. And this is the initial order for phase 2. We do expect during the next fiscal year to have a lot more orders.
Okay.
In terms of timelines, I think this order should get executed in the next 1 to 2 quarters, because the project is on fast track and the government does wants to get this BharatNet phase 2 also off the blocks very quickly. And in terms of the margins, as we had mentioned in our phase 1 execution of BharatNet, it has been in line with our overall margin, and we don't see anything going away. So we should continue to see healthy margins on this order as well.
Okay. Mr. Nayak, if you could just give us a sense on, BharatNet phase 1. What has been the total order size from BharatNet phase 1 for your company and even generally for the industry, and what the progress is on BharatNet phase 2?
So BharatNet Phase 1 was for about 100,000 villages, and I say about because it was a little bit more than that. And we initially got orders for around 47,000 villages, which includes the equipment both at the village as well as the block level. And then the total order for the equipment of our kind of equipment was around, I think, around 1,400 crores for Phase 1.
Okay.
For Phase 2, there is going to be 2 sets of orders coming out. One will be coming from the central procurement, which is BharatNet, Bharat Broadband, as well as BSNL. And then 9 states are going to be building their own network on top of BharatNet. So BharatNet is only connecting the Gram Panchayat to the block, and the states will be connecting the districts and the state capital, so there will be additional investment. So the overall investments for our kind of equipment in BharatNet Phase 2 is expected to be around 3,000 to 4,000 crores total, which I think will get executed between FY19 and FY20.
And are you likely to bag this entire 3,000 to 4,000 crore of equipment projects under BharatNet 2, or is there competition? How much could Tejas network?
Yeah, there's a lot of competition, first of all, because there will be, for example, 9 states will have 9 different tenders, and within each state there will be multiple packages. The central tenders also are ongoing for multiple packages across states. So there's going to be a lot of bidders, but for the portion that we do, which is the GPON portion, we've actually had a fairly good success. We have been the best performing supplier to BharatNet Phase 1, and we got the award for that. Phase 2, which is being done by the states, there we do see competition from some of the multinational companies. Although this is supposed to be under the preferential market access PMA policy, there will be certain elements of that project which will be, potentially accessible to the multinational companies as well. So we do see a little bit more competition for certain kind of equipment in Phase 2. But my expectation is that we should be able to get a good amount of business from Phase 2. Of course, it is subject to winning us tenders and all that.
All right. Sanjay, just focusing on this order, you're saying in the next 2 quarters, you're expecting to execute this order from 330 crores. For the first 9 months, you've done 660 crores. So you're telling us that FY19 is going to be far better. I know FY18, you have scaled down your guidance from 20 to 5%. Now it could be flattish or maybe marginally negative. But next year is looking very good. If you're looking to do 300 crores.
That is exactly right. And in fact, if you remember from the time of IPO, we've been, mentioning to all the investors that, see, ours is a little bit of the nature of our business is it's a little bit lumpy. So we'll have some large orders which flow in and which could be across this quarter or the other. So this year, and if you see our past history also about 2-3 years back, we had a flattish year, and then the next year we grew more than 50%.
So will you grow more than 50% this year? FY19, 40-50% possible?
I think it is possible because we do have we're going to be, when we talk again in April, I think we expect that we'll have a very healthy order book to begin the year because there's a lot of wins which we have, a lot of orders which are flowing in. So I feel comfortable that with the momentum of the business, the long-term outlook which we had given, which is a 20% CAGR growth over the next 3 years, we still stand by it. And whatever is the shortfall this year, a significant part of that should get covered in FY19 itself. And that is just the nature of the product business. And as I said, we've not lost any business. It's just the shifting of the order.
If you could elaborate a little more, what is the quantum of order delays that you were expecting to close in FY18 but has gotten pushed forward, and therefore the revenue shortfall on account of that?
Yeah, so basically what happens is in our business, we have few customers who are very large operators or entities like government. And if they if you just take this order, 336 crore order, if it comes, say, about a month back, we would have had a reasonable amount of time to execute a portion of the order in this fiscal year, which is what we had originally expected, and some of it would have gone to the next fiscal year. But it's just not this order. I think we had 2 or 3 other larger orders which we are working on, which, as I said, we will announce as we get to those. We just believe that it is just the timing of those orders, and our business is really more of a annualized, longer-term kind of business rather than a quarter-to-quarter. And that is the reason we do not give too much credence to the specific quarter, except that we just want to make sure that we communicate clearly as to whatever is happening in the company.
Right.
But overall business and order inflow and the business potential itself in terms of all the international investments, by the way, which we've been making, are also starting to yield into good, good traction as we go forward.
Right. So Sanjay, 40% revenue growth with margins of 20%. That's something that you're targeting in FY19, right?
No, 40% growth with not 20% margin, but around our PAT is around 13-14% at this stage.
No, the operating margins is what I'm talking about.
Yeah.
2020. Final question, Sanjay, remember the time of the IPO as well, we asked you this question, working capital days. Now, that's something that the street was a bit concerned about Tejas Networks. What was that number in the past quarter? Is that number improving?
Yes. So if you see the trend line, so when we went for IPO in June, and we said over the next 4 quarters, which is by the end of Q1 of next fiscal year, we should be able to bring down the working capital to 120 to 130 days. We are getting in the right direction. So quarter by quarter, we've been improving our working capital efficiency.
Okay.
And we believe that by end of June quarter, we should be able to achieve our target that we had set out earlier.
Okay, thank you very much, Mr. Naik, for joining in. That's the word from Tejas Networks. FY18 is going to be a bit disappointing. The company has missed its own guidance. They started the year forecasting a revenue growth of 20%, but they will end with a degrowth in FY18. But orders are coming in, and that leaves the company in a very good position for FY19, according to the management. We leave you with excerpts from our exclusive conversation with Vinod Rai, the chairman of the bank's board bureau. When we return, Ashwini Gujral and Sandeep Bagle will join in with their trading strategies.
I think government has made its intent very clear in this. See, in constituting the bank's board bureau, government has driven the thin edge of the wedge in, which is in the PJ Naik committee report that you read, the BBB is a first step to creating a holding company to which the government will transfer its stakes. And the holding company will be a professionally run holding company. It will run the banks. So government, in principle, has taken a decision to distance itself. Now the issue is how long it will take. And that's
it's been over 2 years, sir, since the institution BBB came into being, and you have recently also talked about that there was a sense of frustration, I would imagine, that many of the recommendations you made were not accepted.
No, the frustration is, it's not the frustration. You see, what happens is, recommendations can work in an ideal kind of a situation, not when you have the kind of problems which are coming up out of the NPA system every other day. Banks had to go through the demonetization. Banks had to go through the GST, where they had to align themselves to the GST setup. And now every other day we have a problem in terms of the non-performing assets. It's the systems can work, the recommendations can work only after the cleanup has taken place. So as and when we
first clean up, and then
otherwise what will happen is you are just allowing the disease to go and infect the new systems that you will create. So the thing is that you have to take the call, clean up, cut your losses, and then reform.